The silver market is sending signals that most people still do not understand. And according to legendary precious metals expert Andy Schectman, what's coming next could shock investors around the world. While mainstream headlines continue focusing on stocks, interest rates, and artificial intelligence, a much bigger story may be quietly developing behind the scenes. Governments are buying metals at record levels, industrial demand for silver keeps rising, and physical silver supplies are becoming tighter than many expected. Andy Schectman believes this is not just another normal market cycle. He says the financial system itself is showing cracks, and silver could become one of the most important assets of the coming years. The big question is this: are ordinary investors already too late, or is this only the beginning of a massive move higher? Stay with me until the end of this video, because what Andy Schectman is revealing about silver may completely change the way you look at money, wealth, and the future of the global economy. Welcome back to Pulse of Silver, the channel where we uncover the truth behind silver markets, global finance, and the hidden forces shaping the future of wealth. Over the last few years, silver has slowly moved from being ignored to becoming one of the most discussed metals in the investment world. But according to Andy Schectman, most people still do not fully understand why silver matters so much right now. For decades, silver was seen mainly as an industrial metal used in electronics, solar panels, medical equipment, and manufacturing. Investors focused more on gold whenever economic uncertainty appeared. But now something unusual is happening. Silver is becoming important for both industrial demand and financial protection at the same time. This combination is extremely rare, and it is one of the reasons Schectman believes silver could enter a historic period unlike anything we have seen before. Andy Schectman has spent years studying precious metals markets and global monetary systems. He often warns that the world economy is carrying enormous levels of debt, and central banks are trapped in a difficult situation. On one side, inflation continues hurting consumers around the world. On the other side, economies are slowing down, banks are under pressure, and confidence in traditional financial systems is weakening. According to Schectman, governments may continue printing money and increasing debt in order to keep the system alive. But the more money that gets created, the weaker paper currencies may become over time. This is where silver enters the conversation in a very powerful way. Silver has historically acted as real money for thousands of years. Unlike paper currencies, silver cannot simply be printed by governments or created digitally with a computer. Its supply depends on mining production, and mining itself has become more difficult and expensive. At the same time, global demand for silver is exploding because of new technologies. Electric vehicles, solar energy systems, military equipment, and advanced electronics all require silver because of its unique ability to conduct electricity better than almost any other metal. Schectman believes the world is entering a period where industrial demand alone could create major shortages in the silver market. But what makes this situation even more interesting is the growing demand for physical silver from investors. According to Schectman, many people are beginning to lose trust in traditional financial systems. Bank failures, rising national debts, inflation fears, and geopolitical tensions are pushing investors toward hard assets they can physically own. And unlike gold, silver remains affordable for many ordinary people. This means that if large numbers of investors suddenly rush into the silver market, available supplies could disappear very quickly. Schectman has repeatedly warned that paper silver markets may not reflect the true reality of physical silver availability. In other words, there may be far less real silver available than most investors believe. That idea alone has created major debate among silver investors. Some believe silver prices have been artificially suppressed for years through paper trading systems, while physical demand continues building quietly in the background. Schectman argues that eventually the physical market will overpower the paper market. And if that happens, the price movement in silver could become extremely aggressive. Many analysts focus only on short-term price changes, but Schectman says the real story is much bigger. He believes silver is connected to a larger shift happening inside the global financial system itself. And if he is correct, what we are seeing today may only be the early stages of a much larger transformation. As Andy Schectman continues to study the silver market, one issue keeps standing out above everything else: the growing disconnect between physical silver and the paper market. According to Schectman, this may become one of the biggest financial stories of the decade. Most people do not realize that the silver market is heavily controlled by paper contracts rather than actual physical metal changing hands. Huge amounts of silver are traded every single day on futures exchanges, but much of that silver exists only on paper. Investors buy contracts, institutions speculate on price movements, and large banks dominate trading activity without ever delivering real physical silver. Schectman warns that this system works smoothly only as long as most investors never ask for actual delivery of the metal. But now signs of pressure are beginning to appear. Around the world, physical silver inventories have reportedly been shrinking while industrial demand continues climbing higher. Solar energy companies need silver for solar panels, Electric vehicle manufacturers require silver for batteries and electronics. Advanced technology industries depend on silver because of its unmatched conductivity. At the same time, retail investors are increasingly purchasing physical coins and bars as protection against inflation and financial uncertainty. According to Schectman, this combination is creating a dangerous imbalance between supply and demand. What makes silver especially vulnerable is the fact that most silver is produced as a byproduct of mining other metals like copper, lead, and zinc. This means silver production cannot quickly increase simply because prices move higher. Even if demand suddenly explodes, mining companies may struggle to bring enough new supply into the market. Schectman believes many investors underestimate how fragile the silver supply chain really is. Years of underinvestment in mining, combined with rising industrial demand, could create conditions where physical silver becomes extremely difficult to obtain. Schectman also points to the growing actions of central banks around the world as another warning sign. Countries are aggressively buying gold to reduce dependence on the US dollar and protect themselves against economic instability. While central banks mainly focus on gold, Schectman says this trend reflects a deeper issue: declining confidence in fiat currencies and traditional financial systems. If confidence continues weakening, investors may increasingly move toward hard assets like silver and gold. And because the silver market is much smaller than gold, even a relatively small wave of new investment demand could have a dramatic impact on prices. Another major concern Schectman often discusses is the level of global debt. Governments worldwide are carrying trillions of dollars in obligations, while interest payments continue rising. Central banks are trapped between fighting inflation and preventing economic collapse. If they keep interest rates high, economies slow down and debt problems worsen. But if they lower rates and print more money, inflation may surge again. Schectman believes this situation creates long-term support for precious metals because people naturally seek protection when currencies lose purchasing power. At the same time, geopolitical tensions are adding even more uncertainty to global markets. Trade wars, sanctions, banking instability, and growing distrust between major world powers are changing the financial landscape. Schectman believes we may be entering a period where nations begin reshaping the global monetary system itself. In times like these, silver historically performs very well because investors look for assets outside the traditional banking system. Perhaps the most important part of Schectman's warning is his belief that the public still remains largely unaware of what could happen next. Most ordinary investors are still focused on stocks, housing markets, or short-term economic news. Very few people are paying close attention to the silver market. But according to Schectman, markets often move the fastest when the majority least expects it. And if physical silver shortages continue growing while investor demand accelerates, the next phase of the silver story could become impossible for the world to ignore. One of the biggest reasons Andy Schectman remains extremely bullish on silver is because he believes the world is moving toward a major financial reset. According to Schectman, many people still think today's economic problems are temporary. They believe inflation will disappear, debt levels will become manageable, and central banks will eventually restore stability. But Schectman argues that the system itself has been under pressure for years, and the cracks are becoming harder to hide. Rising debt, banking stress, currency weakness, and growing distrust in governments are all warning signs that something much larger may be developing beneath the surface. Schectman often explains that throughout history, every paper currency system eventually faced problems when governments created too much money and accumulated too much debt. In the beginning, printing money may appear to solve economic problems. Markets rise, governments continue spending, and economies seem stable. But over time, the value of currency weakens, inflation rises, and public confidence begins to fade. According to Schectman, this is exactly why central banks around the world have been aggressively buying gold in recent years. They understand the risks facing the global financial system, and they are preparing for uncertainty ahead. But while gold receives most of the attention from governments and financial institutions, Schectman believes silver may offer even greater upside potential because of how small the market is compared to gold. The silver market is tiny when measured against global investment capital. This means even a small increase in investor demand could send prices significantly higher. Schectman says many investors still view silver as an overlooked asset, but once public attention returns to the metal, the move could happen very quickly. What makes silver unique is that it sits at the center of two powerful trends at the same time. First, it acts as a store of value during periods of financial uncertainty. Second, it remains essential for modern technology and industrial growth. Green energy projects, electric vehicles, artificial intelligence systems, and advanced electronics all require large amounts of silver. As the world becomes more dependent on technology, silver demand may continue rising year after year. Schectman believes this creates a situation where industrial users and investors could eventually compete for limited physical supply. Another issue Schectman frequently highlights is investor psychology. Most people only become interested in silver after prices have already moved much higher. During quiet periods, very few investors pay attention to precious metals. But once momentum builds and headlines start reporting rising prices, fear of missing out spreads rapidly. Schectman warns that by the time mainstream investors rush into silver, physical supply may already be extremely tight. In that environment, premiums on coins and bars could rise sharply, and obtaining real physical silver could become much harder than many expect. According to Schectman, the coming years may force investors to rethink what real wealth actually means. Stocks, bonds, and paper assets all depend on confidence in financial systems. But physical silver is different. It is tangible, limited in supply, and recognized globally as a form of wealth. And if the financial pressures we see today continue growing, Schectman believes silver could move from being ignored by the majority to becoming one of the most desired assets in the world. Andy Schectman believes we may be approaching a turning point that could surprise even experienced investors. For years, silver has traded far below what many analysts believe its true value should be. While inflation increased, debt exploded, and industrial demand grew rapidly, silver prices often moved slowly and unpredictably. But according to Schectman, this unusual behavior may not last forever. He argues that markets can stay quiet for long periods, but when major shifts finally begin, they often happen much faster than people expect. One of the strongest signals Schectman points to is the growing demand for physical ownership. Around the world, more investors are moving away from paper promises and focusing on assets they can directly control. Economic uncertainty, concerns about banking stability, and fears of currency devaluation are changing the way people think about wealth preservation. Schectman believes this trend is still in its early stages. Most ordinary investors have not yet entered the precious metals market in a serious way, which means silver could still be far from reaching peak public interest. He also warns that many investors misunderstand the difference between owning paper silver and owning physical silver. Paper silver products may follow price movements, but they do not always guarantee access to real metal during times of market stress. Schectman repeatedly emphasizes the importance of physical ownership because during financial uncertainty, trust becomes one of the most valuable things in the market. If confidence in financial institutions weakens further, investors may increasingly demand real physical delivery instead of paper contracts. And according to Schectman, that is where the pressure on the silver market could become extreme. Another major factor driving Schectman's outlook is the long-term imbalance between supply and demand. Industrial demand continues growing as governments and corporations push toward clean energy and advanced technology. Solar panels alone require massive amounts of silver, and global investment in renewable energy keeps increasing every year. Electric vehicles, medical technology, artificial intelligence systems, and military applications also depend heavily on silver. At the same time, mining production faces challenges from rising costs, environmental regulations, and declining ore quality. Schectman believes the world is consuming silver faster than many people realize. What makes this situation even more important is the possibility of a broader loss of confidence in fiat currencies. Inflation has already reduced purchasing power for millions of people worldwide. Everyday necessities cost more, savings buy less, and many families feel increasing financial pressure. Schectman argues that precious metals historically perform well during periods when people lose trust in government currencies. Silver, because of its lower price compared to gold, may become especially attractive for average investors seeking protection. Andy Schectman looks toward the future. His message remains very clear. The silver market may be entering one of the most important periods in modern financial history. He believes the combination of rising industrial demand, shrinking physical supply, growing global debt, and weakening confidence in traditional financial systems is creating conditions that could eventually push silver into a completely different price environment. While short-term market movements will always create ups and downs, Schectman says the bigger picture matters far more. And from his perspective, the long-term fundamentals for silver have never looked stronger. What makes this moment especially interesting is how few people still own physical silver compared to other financial assets. Trillions of dollars remain invested in stocks, bonds, and digital markets, while only a very small percentage of global wealth sits inside precious metals. Schectman believes that if even a small portion of investors decide to move toward hard assets for protection, the silver market could experience enormous pressure very quickly. Because silver is such a small market, it does not take massive amounts of money to create major price movements. At the same time, the world economy continues facing serious uncertainty. Inflation concerns have not fully disappeared, banking systems remain under pressure in many regions, and geopolitical tensions continue creating instability across global markets. Governments are carrying record levels of debt, and central banks face increasingly difficult choices. According to Schectman, these problems are not temporary headlines. They are signs of a financial system under stress. In times like these, investors often begin searching for assets with real, lasting value, and silver has historically played that role for centuries. Schectman also believes that public awareness about silver could change very rapidly. Today, many people still view silver as an old-fashioned investment or simply an industrial metal. But once shortages become more visible or prices begin moving aggressively higher, investor attention may return all at once. History has shown that precious metals markets can move quietly for years before suddenly accelerating in dramatic fashion. And according to Schectman, by the time the majority recognizes what is happening, physical silver could already become much harder to obtain. For long-term silver supporters, this is not only about profit potential, it is also about preparation and financial security during uncertain times. Physical silver represents something tangible in a world increasingly dominated by digital systems and growing debt. Unlike paper currencies that can be printed endlessly, silver remains limited by real-world supply. That reality alone is one of the main reasons Schectman believes silver could become one of the most important assets of the coming decade. Before we finish today's video, remember that this content is shared for educational and informational purposes only. Nothing in this video should be considered financial advice or a recommendation to buy or sell any investment. Markets always carry risk, and silver prices can be highly volatile. Every investor should do their own research, understand their financial situation, and speak with a qualified financial advisor before making investment decisions. Thank you for watching Pulse of Silver. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the latest updates on silver, precious metals, and the future of global finance.